I opened my portfolio this morning and saw that little green arrow next to my favourite altcoin and felt that familiar mix of excitement and panic, kind of like spotting your ex at the same coffee shop. You're happy they're flourishing, but you're also wondering what could go wrong. Now, this might shock you, but before we dive any deeper, I'm definitely not a financial advisor, just a nerd on the internet sharing thoughts over a mug of lukewarm espresso. Nothing here is financial advice, so do your own research before pressing buy. Crypto is risky and you could genuinely lose every Satoshi you put in. Any calls you make are 100% on you. There are no guarantees in this crypto space. Period. Today, the plan is simple. We're going to unpack the hidden risks of altcoins and crypto investing in 2025 and beyond. The stuff that doesn't show up in meme coin marketing slides. And if you want to keep the conversation going along after this video ends, head to the link in the description of today's video and jump into our free educational Discord. It's a chill spot where we trade lessons, not hype. Picture this. Crypto market cap blasts past $2.6 trillion earlier this year, outperforming everything from gold to NASDAQ. Yet, in the same week, my buddy lost access to his crypto exchange because of a phishing email that looked so legit. That kind of whiplash is peak 2025. Analysts are tossing around some wild numbers, pure speculation in my humble opinion. Some reckon that Bitcoin could flirt with a whopping $180,000 BTC this bull run if the bull run holds and continues. And yes, there are forums and news outlets still whispering about Cardano's ADA sprinting to a whopping $5 to $7. Those are what I would label as examples, not promises. Think of them the way you would think of the weather forecast, helpful, but you still carry an umbrella just in case. So it's time for me to ask a quick favour whilst we've got momentum. If you appreciate straight talking takes on cryptocurrency, smash the like button and tap subscribe so the YouTube algorithm knows it isn't just another Moon Boy channel. That tiny gesture keeps thoughtful crypto content alive. Alright, back to the messy part. You may have noticed some affiliate offers tucked away into the description of YouTube videos. They can save you a couple of bucks on hardware wallets or data tools, and even bonuses for regulated exchanges. But clicking is totally optional. Remember, affiliate links are a marketing deal. Companies kick back a small fee to creators if you sign up, and that can bias reviews that they make. When you see a glowing testimonial, always ask who's getting paid if I click. Transparency first. Centralized exchange risk. Let's start with the on-ramp. Back in 2021, Bitmark coughed up over $200 million to hackers, and even the heavyweight names like Crypto.com have eaten 8-digit losses. Reputable platforms now stretch 90+% of customer funds in cold storage, run 24-hour penetration tests and promise reimbursements, but none of that is FDIC insurance. If an exchange folds or freezes withdrawals, your coins become IOUs. The safest rule: only pack assets on exchanges while actively trading, otherwise move them to a self-custody wallet. So let's talk about scammers, phishing sites, fake wallets, Telegram imposters. The FBI clocked over $5.6 billion lost in crypto fraud back in 2023, up nearly 45% from the prior year. That's not FUD, that's federal data. The earliest filter is dull but effective. Never type seed phrases online, never click wallet ads, and always double check the URLs. Another red flag, crypto transactions aren't reversible. Once you've sent it, it's gone unless the person receives it feels like refunding. Try explaining that to your landlord when rent money vanishes into a scam. So let's talk about DeFi and meme coins, particularly around Solana. DeFi protocols borrowing against tokens that only exist to be borrowed against. Again, in February, Solana saw $485 million in outflows after a wave of meme coin rug pulls. Liquidity just spun from one hype pull to the next. If the only reason to buy a token is that someone else might buy it later, that's musical chairs, not fundamentals. So macro shockwaves, I've also flagged the boring but brutal risk of a US recession. Crypto still shadows tech stocks, so a broader economy sneezes, the altcoins catch a fever or even the flu. 40% of traders on decentralized prediction markets now bet on a 2025 recession. If they're leveraged on volatility and volatile alts, a macro sell-off can force liquidations before you even wake up. Staking and passive yield myths. Proof of stake sounds like set it and forget it, but in 2025, staking is a maze of slashing penalties, lockup windows, and shrinking real yields. Ethereum's headline 4% APY drops closer to 3% after validator fees, while new chains or newer chains wave 10% but inflate the supply by a whopping 8%, netting you just 2% minus any fees. Assuming price stability, that is, one buggy upgrade or validator downtime and you're eating a whole host of losses instead of yield. Institutions now pay a slashing insurance, shelving another percentage off the returns. The bottom line is always do your own research before staking any crypto. Liquid staking derivatives, think staked ETH, STETH, add liquidity but pile on smart contract risk and potential for depegging. A single exploit can drain a pool before auditors even pour their morning coffee. Diversification across chains and understanding the onboarding period. Tokens can stay locked for weeks after you hit unstake, trapping you during price drops. So always research. So regulatory and tax grey zones. Stateside, the SEC hasn't even finished arguing whether staking rewards are unregistered securities. Meanwhile, MiCA over in the EU gives clearer but stricter guidelines. Tax offices from Washington through to Singapore consider staking rewards taxable upon receipt, even if you haven't sold them. Imagine owning fiat taxes on tokens that have halved during the April dip. Keep a record, perhaps even befriend a tax pro before reporting season. What I would say is you need to understand all the legalities before making any investment decisions, and obviously take everything that anyone says on YouTube with a pinch of salt because most are not financial advisors. So let's talk about privacy and public ledgers. Contrary to spy movie hype, blockchains are public. Your wallet address, timestamps, and amounts from the breadcrumb trail. Combine that with an exchange KYC record, and it's not hard to link your crypto to real-world identity. If privacy matters, learn about CoinJoin alternatives or layer 2s, but understand they can raise compliance flags on regulated platforms. For me, it's something really important to understand when it comes to privacy because there are real risks around kidnapping and people trying to steal your crypto. So definitely be careful. Affiliate traps and influencer culture. Remember those affiliate offers I mentioned earlier? Well, they are fine. We're talking about tools, cold wallets, on-chain analytics, exchanges, you name it, there's an affiliate link for it. But every promo code clicks feeds a referral machine. Some influencers lead with commission instead of honesty and transparency. Glowing reports, skipped disclaimers, and promises of easy yield. Treat every product pitch like you're buying a used car. Test drive the fine print before jumping in. So let's attempt to bring it all together. So where does this leave us all? Firstly, recognize that altcoin investing in 2025 is less Wild West and more Jurassic Park. Fences look sturdy until the T-Rex tests them. The best defense is layered. So this is just my opinion, not financial advice, but I think it's important to look at keeping trading funds on regulated exchanges rather than unregulated. I would also look to see whether they have a proven reimbursement track record. That is no guarantee that they would do that in the future, but it fills me with a little bit more confidence that they've done it in the past. Move long-term bags to hardware wallets, back up seed phrases offline, and enable 2FA, and even go as far as investing in some security keys. I would also vet every DeFi contract. If you can't read Solidity, lean on audit reports and limit exposure. When staking, calculate real yield after inflation, fees, and tax. Diversify validators, chains, and lockup periods. Keep an eye on macro signals, employment data, yield curve inversions, consumer sentiment, rebalance ahead of storms rather than during the storms. And most importantly, stay cautious and skeptical. Feel free to join our free educational Discord. It's packed with a number of people, I think over 7,500 people who share their experiences in the crypto space and obviously help educate people in the crypto space. There is nothing better, in my opinion, than surrounding yourself with people with different levels of experience, all looking to be successful in the same field. So let's look to wrap things up. Yes, the upside of altcoins can be life-changing, but the downsides can crush a portfolio overnight. If you treat crypto like a casino, the house wins. If you treat it like a long-term, highly volatile asset class, research heavily, risks managed, tax documented, you give yourself a fighting chance. Remember that this channel is for entertainment purposes only. All opinions expressed should not be, construed as financial advice. The views of guests and hosts do not necessarily reflect those of the channel. We do not promote any get-rich-quick schemes, trading strategies that guarantee returns or risky financial behavior. All trade decisions are your own responsibility. Viewers are strongly encouraged to do their own research. Trading cryptocurrencies carries a significant risk of loss, and no outcome is guaranteed. This channel does not offer financial services or securities and does not guarantee any results. Affiliate offers are intended only for non-UK EU residents. This content complies with YouTube's harmful and dangerous content policies and is intended for mature audiences interested in learning about blockchain technology. Some of the links are affiliate offers, and we may earn commission if you sign up through them. These are at no additional cost to you. These platforms are not recommendations and are shared for information purposes only. Offers vary and may not be available in all regions. Please consult your local laws and financial advisor before participating. Thanks for hanging out with me. I hope you enjoyed the video. If you did, hit the like button and subscribe. Check out the channel for other guides and how to spot other red flags. Thanks for watching. Take care. I'll catch you in the next one.